What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And oh boy, did we have a red day all across the board. Yes, we did, guys. Nasty day all across the board. Russell 2000 went down 3%. Nasdaq went down 2.60%. Dow Jones went down 1.51%. And the S&P 500 went down 1.84%. Take a look at these, guys. These are the futures markets of the S&P 500. So the futures of the S&P and the Nasdaq 100, Russell, and so forth opened flat for the most part yesterday at 6 p.m. Eastern Standard Time. And take a look at what happened at 10:30 p.m. Eastern Standard Time. Yields shot up. And after that happened, the S&P 500, the futures of the S&P 500 and the S&P 500 for that matter, pretty much kept on going down for the rest of the trading session. Take a look at this horrible downtrend that we saw since 10:30 p.m. Eastern Standard Time. And what is going on when it comes to yields, guys? Let's pull up here the 10-year Treasury yield. Let me pull up here the 4-hour chart. And the 10-year Treasury yield went up today 5%, 5.25%. And obviously, this is an inflation indicator, so the markets don't really like the fact that the 10-year Treasury yield goes up 5% in one single trading session. And from now on, guys, whatever can happen with the markets, and before the Federal Open Market Committee is held on January 25th and January 26th, the markets are going to be paying close attention to the 10-year Treasury yield. Here on the 4-hour chart, we can make the case that TNX is very overextended. You guys can see the relative strength index of this indicator at 77 points. So I think that we might see some sort of retracement of the 10-year Treasury yield down to 1.80%. The 10-year Treasury yield closed today's trading session at 1.86%. But now the question is, how high can the 10-year Treasury yield go? And how is that going to affect growth-oriented stocks, tech stocks, and higher multiple stocks? So if the 10-year Treasury yield keeps on going up, then the next important area of resistance is going to be at 1.94%. We are talking about a former area of resistance back from November and December of 2019. And I think, guys, and if we see things retrospectively, before the COVID-19 crash, the 10-year Treasury yield was way above 2%. It was trading between 2.3%, 2.5%, and way back then, tech stocks were outperforming. So I think that even if this situation of the 10-year Treasury yield bursting above 2% happens to occur, I think that at some point in time this year, and once we have some certainty about the way that the Federal Reserve is going to hike interest rates, I think that tech-oriented stocks and higher multiple stocks are going to settle, even with the 10-year Treasury yield being above 2%. And take a look at this, guys. This is the main concern of the markets as of now. The Fed rate hike probability. As of now, the markets are pricing in the Federal Reserve raising interest rates 4 times this year. Take a look at this chart. So in March, 100%, the markets are absolutely are absolutely convinced that the Fed is going to raise interest rates in March. The first interest rate hike, so according to the markets, should occur in March. 100% likelihood. Then the second interest rate hike, according to the markets, should occur in June, with a likelihood of 87%. Then in September, we have a third interest rate hike with a 76% likelihood. And then, and this is here's where the problem comes over, guys. The markets are very but very sure that we are going to see at least a 4th interest rate hike this year in 2022 because we have a likelihood of 69%. So as of now, and with the huge sell-off that we are seeing all over the place, the markets are pricing in 4 interest rate hikes throughout this year. But what happens if that doesn't happen? What happens if that isn't the case? What happens if we only see 3 interest rate hikes throughout this year? So I'm thinking, guys, that we are still going to see a lot of volatility, at least until the next Federal Open Market Committee is held on January 25th and January 26th. Because as of now, we don't have any certainty about what the Federal Reserve is going to do in terms of interest rate hikes. And the markets are pricing in, according to my opinion, the worst case scenario by thinking that we are going to see 4 interest rate hikes throughout this year. And now let's go ahead and take a look at the sectors of the markets, guys. Take a look at the horrible day that we had today. The only sector that closed today's trading session in the green was energy, going up 0.40%. But other than energy, we had a very nasty day all across the board. Take a look at the financial sector, guys. Went down today 2.23%. You guys already know that the financial sector usually is correlated with the 10-year Treasury yield. That didn't happen today. That correlation didn't occur. So the financial sector had a very nasty day. Goldman Sachs reported earnings, and that's another matter that spooked the markets, guys, because Goldman Sachs, I would say that they reported in EPS terms and revenue terms, they posted a decent earnings report. However, the guidance was a bit concerning because they said that they are seeing a lot of wage inflation. And you guys know that the wage inflation and salary inflation ends up affecting in a very negative way profit margins. So that was also bad news this morning. And I have always told you that the 2 most important sectors of the markets are the tech sector and the financial sector. And guess what, guys? Those were the worst 2 performing sectors today. The tech sector had a nasty day, guys, down 2.40%. And as I just said, the financial sector went down today 2.23%. A very important industry inside the tech sector is the semiconductor industry. And today, the semiconductor industry had a nasty day, guys, going down almost 3%. And if we take a look at the advances and declines distribution, take a look at this, guys. So there's nothing important that I can say over here. Nasty day. We only had 1,500 stocks going up, and on the opposite side, we had 6,104 stocks going down. Usually, guys, when we have this negative correlation between the stocks that went up and the stocks that went down on any given trading session, the next day we usually see a relief rally. However, the sentiment of the markets as of now is very bearish. So, and neither the S&P nor the Nasdaq 100 are extremely oversold. So don't be surprised of seeing another red day tomorrow, despite the fact that today we had a very negative advances and declines distribution. And before going over the indices, guys, I want to show you some trades that I took in today's trading session. And today I had to take a loss on SPY. I didn't time correctly the bottom of the S&P 500, and let me show you. I had a $70 sheep burger over here, so I ended up purchasing 35 shares of SPY at $458.19, paying $16,036, and I ended up cutting the loss once the S&P 500 broke 46.80 to the downside. That was my line in the sand in order to exit this trade. So I ended up selling my 35 shares at $456.07, and I was paid $15,962. I ended up taking a $70 loss. I also sold covered calls on American Airlines, guys. I sold 2 contracts that expire on September 16 with a strike price of $22, and I was paid over here $256. and I also sold put options of NEO, guys. Let me show you over here. But this is not the trade. Let me pull it up quickly. Let me see where are the puts that I sold. So here they are. Okay. So I sold 3 put options with a strike price of $25 that expire on March 18, and I was paid $393. So as you guys can see, I decided to play it safe today. I didn't do much. I took a loss on SPY. I sold covered calls of American Airlines, and I also sold put options of NEO. S&P 500 went down today 1.84%, and it closed today's trading session at 4,577 points. I am going to zoom in here on the 4-hour chart and take a look, guys, at how the bulls managed to find support today at this 100-day moving average like clockwork on 2 occasions, actually. So I'm thinking, guys, that if the bears can take on tomorrow this 100-day moving average, if they can break this moving average to the downside, we are very likely to see a flush down to 4,500. 4,500 happens to be a former area of support back from early December and also back from mid-October. So can the S&P 500 visit 4,500? I think that this is very much a possibility, guys. Take a look at the RSI of the S&P. It is at 32 points. It is low. Obviously, the S&P is about to enter into oversold territory, but let's face it, guys. Take a look at the RSI chart down here. So we have seen before the S&P 500 trading with its relative strength index at very low points, guys. 18, 22, 21 points. So I'm thinking, and I'm very, I feel pretty much sure, guys, that if the bears can take on this 100-day moving average, we are very likely to see 4,500. If the S&P happens to pay a visit to 4,500 in a very aggressive way, then the RSI is going to be way lower, and that is going to increase the likelihood for the S&P 500 to find support at a previous area of support and then bounce back up. In terms of resistance, let me pull up here the 1-day, 1-minute chart and take a look at how the S&P fell today at 4,600 on 1, 2, 3, 4, 5, and 6 occasions. So needless to say, the most important area of resistance tomorrow is going to be 4,600. If tomorrow I happen to see the S&P pulling up and failing at 4,600, I am very likely to grab some put options because that would open an opportunity in order to take a gamble against the S&P 500. And now let's go ahead and take a look at the Nasdaq 100, and the NDX is looking nastier, guys, than the S&P 500, below the 50 SMA on the 4-hour chart, 180 SMA on the 4-hour chart, and also below the 100-day moving average on the 4-hour chart. We could make the case, if we want to see things glass half full, that maybe the NDX is about to unfold or is about to make over here a double bottom formation, guys, right at 15,200 points. However, if 15,200 points happens to be broken to the downside tomorrow, which I think is in the cards, we might see the Nasdaq 100 paying a visit down to 14,800 points, which happens to be a former area of support back from mid-August and also back from late July. And if I pull up here the 1-day, 1-minute chart, we find a chart that looks pretty similar relative to the S&P 500. And why? Well, because the NDX failed today on 1, 2, and 3 occasions right at 15,350 points. So needless to say, watch out for this area tomorrow, guys. If the Nasdaq 100 happens to pull up a bit and pays a visit down up to 15,350 points, and if it starts to fail at bursting above this area, this might be an opportunity in order to grab some put options of the Nasdaq 100. Now let's go ahead and take a look at the first stock of this video, which is going to be Digital World Acquisition. And this special purpose acquisition company has been on an absolute tear based on nothing, guys. We haven't had any good news to justify Dwac to go up 21% in one single day. And on top of that, on a day in which the markets went down a lot, in a day in which 90% of the stocks went down. So what is going on over here, guys? We know that the markets are running away from risky assets. And what are we talking about, guys? Dwac is risk on mode, like 100%. So be careful over here, guys. The stock of this company, or the stock of this special purpose acquisition company, is extremely overbought. You guys can see the RSI at 82 points on the 4-hour chart. So maybe if Dwac happens tomorrow to pull back a bit and pays a visit down to $74, we are talking about a former area of resistance back from January 12th, and we are also talking about a former area of resistance back from late October. That might be a spot in which I would be tempted, in order to start a trade on Dwac. If I happen to start a trade, let's say at $75, and if Dwac happens to bounce back up, what about a trade up to $88, an area of resistance in which this special purpose acquisition company fell today? So from $75 up to $88, we are looking at a 15% profit, but be careful, guys. The higher this special purpose acquisition goes, the more dangerous it becomes. So be careful, and let's see if Dwac can pull back a bit, pay a visit to $75, and then bounce back up. And the second stock of this video is going to be Merck. And in the case of Merck, what is going on over here, guys? This is the stock of a company, guys, that we need to keep a close watch on. Remember, the markets are seeing, as of now, a huge rotation into value stocks. Obviously, Merck is considered a blue chip stock. This is a company that pays a dividend. This is a company that has a predictable revenue, predictable cash flow. So I think that this company might be benefited from the current environment in which the markets don't want to do absolutely anything when it comes to higher multiple stocks, tech stocks, and so forth, right? In technical terms, guys, here on the 4-hour chart, we can see a textbook ascending triangle. You guys can see how Merck is uptrending into a very well-defined resistance at $82.50. $82.50 also happens to be a former area of resistance back from mid-January and also back from early October. So I'm thinking, guys, that if Merck can take on $82.50 on good volume and momentum, I think that the bulls of the stock of this company are going to be able to fill the next gap up to $85. $85 happens to be a former area of resistance back from early October. So if we were able to take a trade on Merck from, let's say, $82.60-ish, once we have confirmed from a technical standpoint that Merck was able to burst above this ascending triangle, that Merck was able to burst above the upper line of this ascending triangle, sorry guys. So let's say that we pick up some shares at $83, and if we are able to write them up to $85, we are looking at a 3% profit trade, nothing to sneeze at. The RSI of Merck is at 57 points, very healthy from a technical standpoint. This implies that Merck is neither oversold nor overbought. And on top of that, guys, we can see very clearly here on the 4-hour chart a golden cross. You guys can see how this 50 SMA crossed above this 180 SMA on January 7th. So I think that Merck is looking very, but very attractive from a technical standpoint. And on top of that, this is a blue chip stock, which, as I just said, might keep on benefiting from the current rotation that we are seeing into value stocks. And now let's go ahead and take a look at the third stock of this video, AMC Entertainment. This is a tragedy, guys. Now, this is not AMC. Let me pull it up correctly over here. So AMC went down today 8.41%, and it closed today's trading session at $18.84. So I have been telling you this, guys. If AMC isn't able to close above $20 in, let's say, 2 or 3 consecutive trading sessions, this is going to be good night, Irene, no doubt about it. The next important support for AMC is going to be at $15. We are talking about a former area of resistance back from late May and also back from mid-May. And in terms of the work that the apes or the bulls of AMC would have to do in order to have AMC come back to life, they need to take on $20. We are talking about a former area of support back from mid-December and try to make another push higher in order to try to reconquer this 50 SMA on the 4-hour chart at $23. If we were able to take a momentum trade on AMC, I could even think about buying calls, maybe. I might even purchase some shares with a very tight stop loss over here, guys, because momentum seems to be gone from $20.30 up to $23. We are looking at a 10% profit trade. So let's see what happens with AMC, guys. I think that we are seeing the last episodes of the series, and something is gonna happen, guys. Either AMC bursts above $20 and starts to recover, or, and as I just said, if AMC isn't able to close above $20 for, let's say, 2 or 3 trading sessions, 2 or 3 consecutive trading sessions, I think that this is going to be the end of the saga of AMC Entertainment, unfortunately. And now let's go ahead and take a look at the last stock of this video, Pinduoduo. And in the case of Pinduoduo, guys, take a look. A Chinese stock that has gotten absolutely decimated lately, and Pinduoduo managed to go up today 1.85%. We had some Chinese stocks having a decent day today. I think that JD.com also went up. Baba is starting to reverse its downtrend. So is this the beginning of a rotation into Chinese stocks? That could be the case. I don't think so, because as of now, the markets don't want to know anything risk related, but we will see what happens. In the meantime, the 4-hour chart of Pinduoduo looks very interesting, guys. Take a look at $63. $63 is a previous area of resistance in which Pinduoduo felt on January 11th, and it also felt back in mid-December. As of now, Pinduoduo, which by the way went up today 1.85% and closed today's trading session at $61.53, is trading above both moving averages. So this 50 SMA and this 180 SMA on the 4-hour chart. The RSI of Pinduoduo is at 58 points. Very healthy from a technical standpoint. So I'm thinking, guys, that if the bulls of PTD can take on $64 on good volume and momentum, they might be able to fill the next gap up to $73, which happens to be a former area of support back from mid-August. If we were able to take a trade on Pinduoduo, a momentum trade, once we have confirmed from a technical standpoint that the stock of this company was able to burst above $64, let's say that we pick up some shares at $64.20-ish, up to $73, we are looking at a, get this, guys, 12% profit trade. And in terms of how off the highs Pinduoduo is, let me take a look at this, guys. So all-time high for Pinduoduo, $212, guys. I mean, this is what a tough market we're dealing with, guys. Pinduoduo is 71% of the highs. Unbelievable. So watch out for Pinduoduo bursting above $64 per share and possibly being able to fill the next gap up to $72. And with PDD or Pinduoduo, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind that here on the Bilingual Stock Market channel, we are posting stock market update videos on Mondays, Tuesdays, and Thursdays as well. So if you want to get all of the notifications notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday, 3 or 4 hours after the market closes. Peace out.